All right, everybody. We're going to do something a little different today. I've had a couple of requests for trend lines. Trend lines are arbitrary in a lot of ways, not the ones that are connected to something specific, like an open, high, low, close, or something like that. That's not necessarily what we're referring to. We're more talking about angular support and angular resistance, and maybe drawing pivots. So let's talk about pivots on a time frame. We'll make this video about time frame pivots. When we do a top-down approach, I like having my pivots in place. So I'll show you an example of these pivots. They don't look good on the higher time frame. You can see how everything looks just really jumbled. I'm using the labels in these because I post my pictures for others to see. But on the broker that I trade, where I don't share pictures, I don't add the words because it makes it less cluttered. But on a smaller time frame, you can see how once we start to zoom in, those lines really just go where they belong. Now, depending on your broker, you may not be able to turn those lines on and off. I like Thinkorswim because I can do that. I can just turn them all off and get them out of my way and turn on and off different ones. Also on Thinkorswim, you can change the line type. So let's talk about that for a second. We're going to just go to a blank area here. If I draw a line, I can then double click on it and open up this box. I'm going to make it really big and fat here for a minute. So it's a big, fat, thick line. Double click on it again and click where the color is at and go to more. And now where it says HSL, I want to open that up and notice it offers you a chance to turn the line transparent so that we can almost see through it. I'm going to set it to 75% and we're going to go back out. Now you can still see the line, but you have to work a lot harder to see it. And I like to do this. It's an extra step. But there's times I want a line to be there, but I don't want it to be so bright and obvious and intrusive to my field of view. And so I hide it like that. That same trick will work when you're drawing circles or, using the box, whatever you want. All right. So something to keep in mind, you can make your lines less visible. You can also change the line style. All right. So instead of a straight full line, you can do a fat dash, or you can do skinny dash. All right. So a lot of choices. I generally don't go past 3, and I don't often use the mid dash, but that doesn't mean you can't, right? It's all preference. Just use your choice. The reason I started with all of that is because if you're going to start working on multiple time horizon trend lines, it really helps to change their colors, change their line style, so that eventually you get to the point where you maybe don't need the language on the side, right? The written word. And without the written word, these things don't jumble up and make such a mess. Notice what my lines are here. We've got a weekly pivot, quarterly pivot, monthly pivot. Some of my monthly pivots are a solid line, some are dashed. Same thing with the weekly and same thing with the monthly. And then I also have volatility bands and gamma bands and just all kinds of other stuff. But the main thing we're going to work on today is time. So let's go to a market where I don't have anything. Let's go to the NDX. I guess I had something there, but I'm going to delete it. So start with giving it a line, a drawing set. We're going to create drawing set. I'm going to name it pivots. I'm going to set my chart to a quarterly chart. And I now want to set my line. And notice I'm not even up where I want to go because I need the line set to what I want it to be first. It helps if you have a plan. So I know that these are my quarters. And I know that I want my quarterly to be purple. I need a purple solid line, and then I need a purple dashed line. I want my solid line to be a little thicker, so I used a number 2. But I want my dashed line to be thin, so I'm going to set it to a 1, make it dashed, and I'm going to change the color a little bit. I'll kind of lighten up the transparency so that we can still see it, but we have to work a little bit to see it. That's a little too transparent. So I'm going to come back in and set it to 50. Okay, so now I've got the line. One more thing I need to do is it needs to kick all the way off to the right on both of those. Okay, so I've got them. We're just going to bring them up where I'm working. Now we'll start to zoom in. Okay, so the distinction for when I'm using one and when I'm going to use the other. What I'm looking for with the thick line is a representation of how strong the level is. And notice here, that open and that close are overlapping each other. This is going to be a lot stronger than just a high or a low all by itself floating in the middle of nowhere. Okay, so my dashed line would line up at one of those individual open, high, low, close that doesn't have any connection to anything else, anywhere else. It's still a monthly pivot that I want to track, but it's not as strong. It's not as thick. It's not as powerful. So it's dashed. It's harder to see. And that's the distinction, right? So I'm on them quarterly. I've got this one. I want another one. Once you've got it highlighted, see how when I click it, it turns blue? Once you've got it highlighted, tap the space bar. It just duplicated. Now I can grab it and I can move it. The old one is still there, and now I have a new one. I'm going to see if it lines up here. It doesn't match this open or that close or that open. So it's not really what we're looking for, but it's so close. And if I tried to bring in that dashed one, I don't think there would be enough room for both. So I'm going to keep that one, keep it solid, and I'm going to duplicate it, make another one. These two are really, really, really close together, and so is that low to the whole mix. So I'm going to keep that one solid as well. Now, there's no reason to go all the way down here because we're not anywhere near that at this point. If I ever needed it later, then I would focus on that. So we've got our level here. It's just a low floating in the middle of nowhere. So I'm going to take that one. Our current quarter, I'm going to take that one. And our current high. So we've got quite a bit. Now I could try to zoom in and put one at that open. But again, I honestly think it would just be too close to that more solid quarterly level. So I'm going to do it just so we can see what it looks like, but it's probably too much. And this is a part of that ambiguity of having too many lines. You really want to find the sweet spot on how many lines do you really want to have, right? And what you got to try to avoid is overloading the chart so that there's literally a line every 15 pennies, right? Something like that. It's just too much. Focus on the most critical levels. Make that your highest priority. You're not really trying to nickel and dime every little pivot. But if a pivot has shown excessive force or, repeated exposure to price action, repeated pressure of price action. Mark it with the heavier line, right? It's the thinner one that really you really want to be cautious of so you don't draw that one too much. So now I've drawn them out. Let's go in and look at it on a smaller time frame. It doesn't look that bad, right? But notice those quarterlies that I was talking about. See how close together they are? That's just not helpful. It's too many lines. So we could try to zoom out and see if either one or the other could be a good pick. The lower one was respected multiple times, and yet so was the top one. So I see the value for both, but in a trade, or if I was looking to get a trade, I need more than that, right? I need to be able to distinguish between the two. So it's just not going to be valuable, right? We'll come back in here and see if we can make a distinction of what we've got going on here. So this old one, it's really far away. We've crossed through that multiple times. I'm going to take that one off. We're going to keep the closer one. We're going to keep that closer one because it's more immediate to our central location, right? It's something that we're dealing with now as opposed to, 2019. Okay, so that deals with the quarterly. Let's go to the monthly. We're gonna need our lines, right? So let's just steal one of these, bring it down here. For my monthly, I want to use blue or cyan. Same concept. I want a thick one, and then I want a dashed one. And with the dashed one, I want to hide it a little bit. So we're going to set that one to 50%. I think this time I could actually get away with 75, but it's okay. 50%. We need to change the letter. M is fine because we wouldn't do this on a 1 minute. So, if you were doing minutes and months, you would want like an MO or something like that. But I would never do these kind of lines on a minute chart. So I don't need to draw up, M is fine. You can write the word month if you want to, right? They're your lines. You can do whatever you want. So we've got our lines. I'm going to bring them up just somewhere so I can see them when I'm zoomed in. But I'm not trying to actually put them anywhere yet. We're zoomed out way too far for that, right? So now we want to do the same thing. We want to see where price has an open, high, low, or close that overlaps in multiple locations. All right, so I'm going to bring these kind of closer to price. I'm still like a couple of years away, right? Let's get a little closer. All right, so where do we have some overlap? And we don't want to overlap our quarterly lines, something to point out. So let's run one up here just to kind of start the discussion of what that would look like. That is off a little bit. It's just a little off. So let's go back to this one. That one as well is off. It's not by much, but it's enough. We could leave it as a solid level, but you notice how they're just not quite lined up. The better they are, the more I want to make them that big, fat, solid level. And if you find one that's like 9 or 12 or 15 different solid connections, make the line just a little bit bigger again. Make it something that stands out. So I'm going to keep that one, even though it's just slightly off. Let's check that one. Oh, that's way off. That's not going to be useful. That one too. Again. So here we go. A perfect lineup on that monthly. I'm going to keep that as a solid line. And I really don't think we have any other monthlies that line up that good that hasn't already been marked. So now we're going to go to the monthlies with a dashed line. This will be more about monthly levels, monthly open, high, low, close levels, right? So notice this Q, it's from the quarterly. Now that I've gone to a smaller time frame, it's no longer touching anything at all. If that bothers you, just bring it over to that close, right? You don't have to, because price, by the time it came back down, it would be there, but a little OCD and everybody is fine, right? So I got that monthly low marked. I want this monthly high right there. We're going to zoom in a little bit. I know it's uncomfortable for some people when I do that. I apologize, but it's got to be done. I got to be able to see. All right, so we got that. This area here kind of already has been covered, and I don't have much opportunity to mark any of those without getting a lot of cluttered lines. So we're going to call it quits there on the monthly. Not much help, right? Really, on that monthly. Let's go to the weekly. So I've got these old lines down here. Weekly, I want it to be yellow. We're going to put the W up here. And then also for the dashed line, we want the W still width of 1 dashed. The only thing we got to do at this point is choose our yellow and then make it a little bit transparent. Perfect. So now we've got our weekly lines, and we want to zoom in again. In fact, I'm going to just make a little adjustment like that. That way, well, I still have that log scale. I was trying to get rid of log scale, and when you're zooming like that, the log scale can make it difficult, right? So, all right. Same thing again. We want to find where there is a lot of overlap, and we don't really want to waste our time marking out a bunch of stuff way up here, right? Because we're nowhere near that, and it's a weekly chart. Let's zoom in a little bit and see if there's anything here week to week worth marking out. And honestly, there just really isn't. Not where levels have overlapped. There are weeklies we can mark, but they're going to be on the dashed line. So let's grab one of those and bring it up. We'll just set it there for a moment, and then I'll zoom in. Now, again, the problem always comes down to having too many lines. So you try to find a sweet spot. Don't let anybody tell you how many lines you should have, but once you're done doing some work, just go in and kind of take a look and ask yourself, did you overdo it? And if you did, I mean, don't be afraid to go and delete some of them. Is it extra work? Yeah, but you'll get a sweet spot at some point. You just have to kind of earn that, right? That experience to kind of figure out what it is that you're really looking for. We're going to steal this one and drag it back a little bit. See how those overlap? And since it overlaps, let's get one of those solid ones. We're going to bring that up, and I'm going to get it close and then delete this old one. Is that where I was at? Yeah, that's where I was at. So it's the high here, and it's the close there, nearly the high there, nearly the low there. A lot of overlap. It's worth making it that heavier line. Could possibly do it there too. Let's get rid of that one. And we'll bring that into play. That's really close. It's not perfect. Let me see if I can find an example of what perfect would look like. We're going to go back out to quarterly and go over to the US dollar Japan. And I'm going to turn off what I already have. Notice how these two line up really, really well. That's exactly what we're looking for. And it would be even better if we could find 3, 4, or even 5 candles that had that overlap. Now, since I've only got 3 candles in this entire little area, we're just not going to see that. But US dollar Japan had ran up into an area that it hadn't been to, right? I'm all the way back to 2004. So there's nothing to really look back on. But if we had that same thing back here, and then we also had it now up front, that would be a lot more powerful, right? Even here where we got that overlap, it's actually the overlap of these two highs. So that's nice. I mean, it's not perfect, right? But so that's what we're looking for, that perfect overlap, and as much overlap as you can get. So for an example down here, those two overlap perfect, and it just missed that set of candles right there. I bet with all of these really close together, that would line up probably on 3 or 4 candles. So that's what you're looking for when you're drawing out your levels, is that overlap. And this is just the way that I mark them, right? Doing the line types and the color, you don't have to do that. It's not needed. It's extra work. But to me, once I get down into the lower time frame, I want to be able to see what I've got going on. This is the work that we just drew. This is the NASDAQ right there, that NDX chart. And see how those levels now come into play. The bigger, heavier line is more respected by price. The lighter line lets me know that, sure, it's a pivot, but it isn't as powerful. And price believed the same thing. It wasn't as powerful. So this is kind of what I want to see. This is what I work to achieve. These levels are not supposed to stop price, right? They're not a handrail to lean on. They're not ceilings and floors. They're more of warnings when price comes into this level. If it was going to reverse, that would be an area where it was likely to happen. It is resistance, right? It is going to resist price. And if it's underneath the price, I'm still not going to call it support. It is resistance. It is going to resist price. It's going to try to stop it from going lower. It's resisting its movement lower. If it's going up and comes into that line, it's resistance because it's resisting price from moving higher. So I don't want to call these support lines, but I could certainly call it resistance. It is resisting price. Now you know how I get my levels for the weekly, the monthly, the quarterly, and why some are dashed and some are solid. And the colors, really, whatever you like, right? You don't have to use mine. What I recommend, though, and it's not just for moving averages, is to set your colors. If you've seen my moving average video where I talk about choosing your moving averages and choosing your setup, if you're like me and you've got multiple brokers, the charts don't always look the same. But when I look at a moving average, I need to know what the darn thing is. And I do that with color. It takes a little while to train your brain, but once you recognize that color instinctively, you're automatically going to know what you're looking at. So for an example, my 50 MAs are always orange. My 20s are always green. My 200s are always purple. Every time I see a purple line, I automatically know what it is. And then, depending on if I have 2 purple lines, one would be an EMA, one would be an SMA. Depending on how fat it is, it might be a daily or a weekly or an hourly. So I use the same theory or logic or concept to do analysis with moving averages as I do with these pivot lines. You want to use consistent work, right? And you could make every line white or every line black, or, you don't need anything else. But if you had 6 lines like this, and they were all the same color and dashed, then you would have to try to read the letters on the side to see what that was. Is it a weekly? Is it a monthly? Is it a quarterly? Once you train your brain to recognize the color and the line type, you don't need the word at all, right? And then, depending on how your chart is, you don't even need the number. And then you just get this really nice line with no words, no numbers, and it's really clean. It's a really great chart. That's the kind of line that I like. And this is how you can train your brain to get there so that all your lines no longer have all that extra big space. All right, so hopefully this video helped you guys figure out from a top-down approach how to do these pivot points. Now, I know somebody's going to ask, well, what about the daily and the hourly? And can I do this on the 15-minute? Sure, of course you can. But they're going to have less and less value the lower down you go. There are a lot of times where I will do work here on my 1-hour chart, and it is a line chart. I do that on purpose. The reason I do this is, let's go out to a daily, and now I'm going to go to a 1-hour this way. You see these gaps? And you see how it's a broken, disjointed chart? It just really kind of doesn't make a whole lot of sense with all the gaps and everything. It's hard to see continuity. I know that's not the word I'm looking for, but it is not a continuous process. It's these big gaps and jerking around and reversals. That makes it hard to do technical analysis. So long ago, I just decided that I would use the line type for my 60-minute. So I'll come in here and I'll do technical analysis work, but I don't draw lines here like these monthly, daily, weekly lines. I draw different lines here, angular support and angular resistance, and I'll measure moves, right? Say if I wanted to measure this range and then plot that range, I'll do some work like that, but not those pivots. With a top-down approach, you do want to start at your highest time frame, whatever that happens to be for you, and then work your way down. I do a lot of intraday trading, even on a 5-minute, and yet my top-down approach starts at that quarterly level. Because if we do run up and we hit a quarterly level, price respects that. Look at the way it hit that quarterly level, and it stopped there. I mean, that was the jam. So that line, I just drew that one today, but that line could have been there for months and months, and the day we hit it, and it just stopped on a dime. Here's US dollar Japan. Go to a 15-minute chart, turn those levels back on. On a day-to-day basis, and when I'm trying to get a trade, or at least trying to see, if there's going to be a bounce and there's going to be a play, and I see price coming down into one of these levels, then I can anticipate that across the board. It's a big major level. And there's the bell. So we made it, right? On these days where we ran up and we hit that monthly average or that monthly level of mine, that was a tradable opportunity. Not necessarily here, but through the S&P, because when we hit here and it pulled back, well, then the dollar pulled back and the S&P popped to the upside. It was a perfect place, all right? And it came from recognizing we're coming into a monthly level. Now, with these levels, once you've crossed through them a couple times, they kind of lose their value, right? Price doesn't respect them as much. But the first time you hit them, they're usually well respected. So that's it. That's the lines. That's how we get them. And these are just the monthly pivots. We'll do more videos like this talking about support and resistance lines and angular support and resistance and measured move. But that'll be another video for another time.